Hello, Seasonal Vantage Insiders, Alex here. So as I'm doing this video, it is actually on the Sunday past midnight, 13th of January 2025 at about 1 a.m. Okay, so the reason why I'm doing this video right now, it is because, okay, on Monday afternoon, most likely I won't be at desk. I will be at JB. Okay, so taking a break after the trading carnival. And by the way, for those who came for the trading carnival on Saturday, so happy to see you. So thank you for supporting this event. Okay, and yeah, so I won't be also doing the Facebook live and the YouTube live stream at 10:30 p.m. Tonight. Okay, so there won't be, I repeat, there won't be any Facebook live tonight because I won't be at desk. Okay, so just to let you know, so that's the reason why I'm doing this video right now, to give you the so-called the update necessary for this coming week. Okay, so let's kickstart this session right now. So before I go into this week update, okay, just a very brief recap, okay, on what has happened and some of the position that I had. Okay, so as you might have known, this last week, okay, the market hasn't been really high. The market has been coming down. Of course, since I'm already here, okay, so this is the S&P 500 futures over there. You can see that, the market last week has been generally, coming down. Okay, this is the S&P futures. Okay, so let's head back to the members area over here. So, oh yeah, so before I update, right, just to let you know, okay, I have updated that, there is some update in the seasonal data. Okay, so this seasonal data have incorporated, okay, the whole year of 2024 last year. Okay, so it's the latest one. And if you go to the updated page on the seasonal data and the OHPC members area over there, right? Okay, you'll be able to download this version too. So for example, for this OHPC, so previously this OHPC right now, you can see that this is a V2. V2 is the latest one, V2. Okay, so go and re-download again. Okay, it will not really differ a lot, but there are some changes. But to ensure that you get the latest data, okay, download the V2. Okay, and if you go to the under the reports section over there, okay, head over there and you'll be able to see that it is also updated to the latest V2 version. So go ahead and download the latest updated data sheet. Okay, and for the web-based, it is not updated yet because I've been really busy with the trading carnival, okay, for the past 1 or 2 weeks. Okay, but I rest assured that, by the end of this week, okay, this will be updated to the latest version as well, the V2 version. But okay, it shouldn't differ a lot. Okay, but even the V1 version, it is good enough, okay, for you to have some, data on the bullish or the bearish data sheet on the stocks and the ETF as well. Okay, all right. So for this last week, right? Okay, I mentioned that, I still maintain the IWM and the KIM. So unfortunately, the market hasn't been very kind. Okay, I get stop out on IWM and I get stop out on the KIM as well. But gold, okay, it is still doing pretty well as well. So I get stop out. Okay, so market not very good. So it is earlier than I expected. I mentioned that, this coming year we do expect the market to be so bullish. Okay, expect some choppiness. Okay, to expect like to be in 2023 and 2024 where the market has 2 consecutive years of 20+% return. So this year, okay, the correction, so called the choppiness, is here already. So it is perfectly normal, that if you get stop out. So I get stop out as well. Okay, so it is, to me, it's normal. Okay, you shouldn't be get too affected by the stop out as well. It is part and parcel of swing trading or even position trading. You will get stop out. Okay, that's the reason why I say that, if you can, okay, your buffer, your previous reward to risk ratio, okay, should be at least 1:5, 1.5. Okay, so that, for example, if you risk $100, you get back $150 profit. That's the reward to risk ratio 1.5. So that, okay, in any cases, okay, there are some correction, there are some stop out, okay, there's still some buffer, okay. If you lose half the time, you are still profitable. So that's the reason for that, and it is starting to have some correction already. So you should, by right, you shouldn't have too concerned about the correction. Also, if you feel, sian, okay, you get stop out, it is perfectly normal. So if you also feel sian, you get stop out, but it is normal, okay, it is normal, okay, all right. So just let you know, I get stop out as well, okay. All right, so this is the update. Okay, so previously I mentioned that I am still gravitating more towards the bullish side of thing, but okay, price action has shown that the market isn't so bullish right now. There are a few reasons. So trying to find clues as the market shows us what it is doing, more price action. Okay, price action meaning that what the price is doing right now. So let's head back to the charts right now. So this is the S&P futures. So we can see that prior to that, the market has been always in a steadily uptrend. Okay, of course with the cloud and the central pivot range as well. Even though prior to that, price broke below the cloud. This is based on the daily time frame. So the market rebounded quickly afterwards, and you can see that over there in 2024, there's a brief period of time in August where price go below the cloud, but after that price rebounded, go below the cloud, price rebounded and such. And after that, this is the first time this year that price is below the cloud right now. Okay, if price cannot reverse back higher within the next, a few days or so, okay, which I think is quite unlikely. And this so-called the flat cloud resistance area, okay, it is at about 5995. So if price goes back to 5995, it will face a quite strong resistance area over here. This is based on the S&P futures. Futures are not the cash index. I'm looking at the futures right now. Okay. And if you take a look at the Nasdaq, okay, it is supported at the cloud, okay, but all in all, it is still in an uptrend for the S&P, okay. It is still above the yearly pivot, okay, so far right now, okay. But the bad news is, okay, the Russell 2000, this is the RTY, Russell 2000 futures, okay. You can see that it is the weakest among the key indices, okay, coming down after that, like in hindsight, okay, this look like a flat pattern and coming down. And right now, it is actually below the yearly central pivot range. So this yearly CPR, okay, this black line, it is quite important. So to me, it tells me the long term, okay, whether it is an uptrend or a downtrend. Okay, very similar to the green line that you are very used to, the monthly CPR, but this is the yearly CPR. You can see that it is below the yearly CPR right now, this black dotted line, and of course below the money CPR, and of course below the cloud. Okay, so for Russell 2000, it is not doing that well, and for the Dow Jones, okay, it is like the second weakest after the Russell 2000. So it is, after once again a consolidation below the cloud, and right now trying to test the yearly CPR as well. Okay, and if you take a look at the equal weighted S&P 500, that is the RSP, also not doing so well. Once again, the clue is price is below the cloud, and once it goes back against the CPR, it is acting as a resistance area again. Okay, after that, come that down and testing the CPR. Okay, so yearly CPR. So all in all, okay, I am gravitating right now from a bullish point of view to more of a neutral. Okay, going to be bearish soon. Okay, and I have my reason for doing that. So previously I was trying to don't try to short, okay, and try to go stay long. But as the price move, okay, within the past 1 to 2 weeks, okay, it is starting to show some cracks to me. Of course, I could be wrong. This is just my personal view. I'm not God, I won't know what happened, okay, but it seems that based on just price, it is not doing so well, even though previously I said that market breadth has been pretty weak, but price action is still number one right now, okay. All right, so if you take a look at the DP gallery right now, which I've always been showing, okay. Okay, so the market breadth, okay, is at a low, but of course, nobody said that low cannot go lower, okay. But previously, I thought that it can have some bounce, but in fact, there were some bounce up, but it was a very short-lived bounce, okay. And even for the 50-day EMA, to be honest, okay, it is at a relatively low, okay. But okay, yeah, this is, even though I expected some bounce, but the price action doesn't seem so. And if you take a look at the percentage of stocks above the 200-day, we are at the 50% mark. If we drop below 50% mark, then also not very bullish point of view. Okay, and not only that, do you remember during the SVI Connect Night in last December, where I shared with you so-called the roadmap for 2025, so-called the market outlook for 2025. So if you have actually forgotten about that, or somehow you didn't really follow the members area and my updates, right? Okay, just to let you know, if you actually go and scroll down, okay, the SVI members only webinar over there, okay. All right, so you can see here 19 December, okay. This is the video. Okay, so I didn't upload this one, so you should go to the SVI Connect Night presentation. Okay, all right. So you can see that this is the PDF. Okay, so or you can go to a shortcut. Okay, just type SVI Connect Night. You should be able to find the post also lah, right? Yeah, okay. So download the SVI Connect Lite. So that was the presentation slide where I share with the members the outlook and the roadmap, the seasonal roadmap, okay, for 2025. Okay, so if you take a look at the roadmap over here, let me see whether is it here. Okay, this is the SVI Connect Night. So you can see over there, I shared with the members, okay, the S&P post-election seasonal trend and the rest of the so-called asset classes. So I'll just zoom into the S&P post-election seasonal trend. And do you realize that it has been quite spot on, okay, since the start of the year? So right now it is, as I'm doing this, okay, the latest update is on the number 11, okay, but you can see over there, okay, at the start, okay, post-election, that's after the election. So after the Trump election, the US election in 2024, this year, 2025, is the post-election year. So you can see that, it says that based on the past 18 cycles, okay, 50 years, yep. So you can see that actually for the past 70 plus years, since 1950, okay, so you can see that initially it went higher, then come down, then it comes down, okay. This is exactly like what is happening right now. So you can see that for the S&P 500, okay, S&P, at the start of the year, it is going higher and then it is starting to come down. So this is exactly the same on this chart as well. So you can see based on this roadmap, okay, again, it doesn't mean that it's going to be following 100% exactly like it is, but it maybe can give us some anticipation, okay, some clues that what could happen. So based on that, you can see that the market might continue to have a weakness until second half of January, okay, maybe until about 20th, that kind, if I'm not mistaken, okay, then that could be a short-term low, okay, and then the price might have some rebound until early February, where the market might take another nosedive, okay, until April, okay, where the market will start to go higher. So which means that, okay, from now, okay, until second half of January, after mid-January, maybe until 20th or so, okay, all right, there could be some more weakness. Until then, after that, there could be some so-called technical rebound. After that, okay, in early February, price started to go down again, okay, and then some choppiness, okay, until where maybe early April, that could be the bottom as well. So this is what could happen. Again, I'm not saying that this would happen. I'm just saying that could happen. So do prepare if the market might have some more correction. So judging that, okay, as of now, I am not so keen to go long into the market, okay. And if you really ask me right now, okay, the market has been coming down for the past 4 days or so, 5 days at 1, 2, 3, 4 days at 1, 2, 3, 4 for the S&P futures, okay. All right, not exactly the best time to go short on the index, okay, or even the Russell 2000, but there could be potentially, shorting opportunity in individual stocks as well, okay. So personally wise, I wouldn't be so keen to go long right now, okay. For those who are very unsure, you can also take this opportunity to don't do anything, okay, just stay on the sideline. You don't have to really trade all the time, okay. All right, if you are less experienced, okay, a newbie trader, it is okay not to trade, okay. All right, clear on that. It is okay not to trade, okay. All right, so for me personally, I wouldn't be so keen to go long right now if I'm just judging based on this S&P post-seasonal trend roadmap over there. There could be some more weakness until the after mid-January, as I mentioned a few times already. Okay, so for me personally, if you are looking for opportunity to go short, there is, okay, but I wouldn't be looking for to go long right now. Even if I want to go long, that would be second half of January, maybe after about 20th of January or so. Okay, so if you're looking right now for this week, at least for this week, I'm looking for some opportunity to go short. Okay, if you are not comfortable with shorting, sell short, which means that you sell first, then you buy back later, okay, for a profit, okay, it is okay not to trade, okay. Once again, I repeat, if you're not comfortable with shorting, or if you just want to stay on the sideline, that is perfectly fine as well. But if you're looking to maybe try to have some shorting opportunity, you could, and I'll be looking at a few stocks. In fact, there's only three stocks that I am looking at. So if you look at the data, so for this week, I wouldn't be looking at the bullish stocks, okay. So for this week, actually, the calendar period, it is Sunday to Sunday. That would be on the 12 to 19, 12 January to 19 of January, okay, 12 to 19 now. So based on the data that I'm looking at, okay, the bearish data, okay, over here, all right, so 12 to 19, so it's 10, 13, 14, 15, 21 is outside the scope, so I wouldn't put that, but if you want to, you can put it as well, okay, 9 to 21, but I'm trying to standardize everything for the sake of simplicity, okay, 12 to 19, okay, this is my data sheet that I'm looking at, okay. ETF as well, there isn't a lot, okay. So based on the data that I have, okay, the stocks that I'm looking to shorting opportunity, okay, the first one, it is actually SWK. This is Stanley Black and Decker. You might have seen the brand before, okay. They do a lot of this like vacuum cleaner and such, like they do a lot more things that, but Black and Decker, also called I think if this is a consumer durable tools and hardware, okay. You most likely you would have seen this brand before. So once again, this is the daily chart of Black and Decker. You can see that it is previously it had some very serious downtrend, then consolidation, okay, and then it is coming down. So if you zoom in into the weekly time frame, you can see that this look like a bear flag pattern, okay, and then I'm just using a very simple trend line over there. This is a weekly time frame. Every single bar is 1 week. It seems like price once again has broken below the trend line, okay, and not only that, it is also below the yearly central pivot range, yearly, and also the monthly CPR. So all in all, Black & Decker, it is a downtrending stocks, okay? And based on the data that we have, Okay, SWK, SWK, oops, SWK. All right, so this is Black and Decker, 13th of January to 27th of January. Okay, for the past 11 years, 10 years, it was down. Okay, 3% return average. Okay, industrial machinery over there. Okay, and if you take a look at the chart, there is actually a wash and rinse pattern. So you can see that there was some impulse move to the downside and then a pullback to the central pivot range and acting as a resistance area. Okay, price initially tried to rebound, but on Friday it went down lower. So there was actually a wash and rinse trigger. Also can see that this is on Monday 6th of January, where this is the price closed above the prior day high. So the prior day high, it is actually 81.10. Okay, 81.10. So this was the wash line. Okay, and right now price it is below the wash line once again. So let's see whether this coming week, okay, price can at least test the low over there or possibly going down lower. So this is for SWK, Stanley Black and Decker. Okay, the second one that I'm looking for a shorting opportunity, okay, it is LOPE. This is an education company, Grand Canyon Education. Okay, so if you take a look at the data sheet, let's search LOPE. How come don't have? Should have LOPE. It should have. I don't know where is it. Okay. This is weird. But nevertheless, okay, this is one stocks that I am looking at, LOPE. This is Grand Canyon. Okay. All right. So you can see that Grand Canyon. Okay. All right. So yeah, weird. I can't find the data sheet. No, but it appear in my watch list. Okay. Nevertheless, okay, just keep a watch list. Watch okay on this Grand Canyon. So based on the seasonal, it should be bearish as well. Okay, but if you take a look at this, okay, it had a very impulse move over there. Okay, and then come down. Okay, right now it is testing the monthly CPR again and coming down once again. You know, this is there is a wash and rinse trigger as well. Okay, this is the day on Wednesday where price closed above the prior day high. Okay, prior day high. So the prior day high, it is actually 162.55. Oops, not this one. 162.55. Okay, and then price actually it is below the wash line right now, is below 162.55. So let's see whether this coming week price can continue to go down lower for Grand Canyon, LOPE over here. So at least I'm looking at price to at least test the swing low over there lah. Okay, and of course if price really can come down to the upper range of the yearly pivot point here, okay, then that will be like, you know, a support area over there. Okay, this is for LOPE. And last but not least, okay, it is FCX. This is Freeport McMoran. This is a copper company. Okay, they mine copper. Okay, copper company over there. All right. So if you take a look, of course, you're going to be a proxy like copper. So let's take a look at the copper right now. So we can see that for the copper price, okay, copper price, okay, it is actually going higher. But if you actually add in my okay, Elder Force with the ATR channel, you can see that based on the daily time frame, okay, the red dots are also showing already, which means that it is at an overbought extended area over there, okay. And of course, you know, the copper futures, it is also below the yearly CPR as well, yearly CPR, okay. And based on seasonal trend, if I'm not mistaken, copper is also not doing so well right now during this period of time, okay. I do have the copper futures data with me right now in the ETF, but okay, I mentioned before, you can go to equity clock, okay, you can go to equity clock, okay, and check out some of the other asset classes, okay, if my data doesn't show it, okay. So this is the equity clock. If you go to the commodity futures over there, copper futures, okay, you can see that, you know, it is generally choppy in January to February, and more of a downside move, okay, from about mid of January until the end of February or so, okay. So yeah, so all in all, yeah, this copper right now not so bullish for now, okay. So if you take a look at FCX right now. This is weird. Did I miss out anything? How come I did not show the FCX? Okay. Later I'll check it out, my data sheet. But for now, looking at FCX as well. So this is weird. This is weird. Or I added in something. Okay. FCX. Okay, never mind. Okay. Somehow it appear. I copy and paste into my watch list, but don't know why it didn't appear. But FCX, okay, I'm also looking at right now. FCX. Okay. All right. So just to take note, okay, the earnings, it is coming up soon, just 10 more days. But you know, if you really want to enter, then you should exit at least before the earnings start, okay. All right, so you can see that price actually, you know, a downtrend side, okay, downtrending, and then goes higher right now, testing the CPR, and there's also a wash and rinse pattern right now. So the Wednesday price closed above the previous day high, okay. All right, so you can see the previous day high, it is actually 39.17. 39.17, okay. And price actually closed below the wash line on a Friday. So let's say the price can continue to go lower, okay, just before the earnings on 23rd. So these are the few stocks that I'm looking at. But okay, if you're looking for me, okay, the SWK actually looks quite a decent stocks to go for shorting opportunity. So I'm looking at these three stocks for now. So regarding the Grand Canyon and FCX, okay, I will take a look at the data again, and if there's any update, okay, I'll post it in the comments, okay, under the post for this, okay. So just a recap here, okay, there won't be any Facebook Live and live stream on YouTube tonight, okay, at 10:30 p.m. because I won't be at desk, because afternoon I'll be at desk, so won't be have time to prepare. Okay, so there won't be any Facebook Live, so don't wait for it, okay. And yeah, and for now, I'm more looking for some opportunity to short. But if you're not comfortable with short selling, okay, doing short is fine. Just stay at the sideline, it is fine as well. Okay, so with that, thank you so much. If I have more updates, I will do it in a video post as well. So with that, thanks so much and bye bye.